The California Franchise Tax Board, or the FTB, is responsible to collect taxes on your personal income taxes and from your business here in California. The FTB does not mess around. When it comes to collecting and administrating the tax law here in California, the FTB is extremely efficient. They do take action, and they take action quickly. If you're having any types of issue with the California Franchise Tax Board, it is very important that you act quickly as well. The top 3 things that they can do to really mess with you is take involuntary collection actions against you. The first one is through a wage garnishment through your employer. The second one is a bank levy to your bank. And the third one is a state tax lien. When you owe back taxes to the California Franchise Tax Board, I am going to lay out the steps that you need to take in order to get back into compliance with the California FTB. The first step is to get caught up in all your tax filings with the Franchise Tax Board. In order to do this, you could use your IRS transcripts. That's right, the IRS, your federal transcripts. They probably have more reported accurate information than the Franchise Tax Board. So if you have years of unfiled taxes, I would reference the IRS transcripts first to help you file the California taxes secondary. And keep in mind, once you get caught up in tax filings, the mentality is remain in tax filing compliance. Don't be delinquent with any future tax filings, and don't have any new tax debt past the future deadlines. If you happen to break filing compliance, whatever resolution that you do put in place with the California FTB is going to be thrown out the door because you're going to be delinquent and is going to default any agreement. Once you're caught up with all of your tax filings, the second thing is you would want to review all of your current finances. Hey, if you're liking this video, click like and don't forget to subscribe to my channel. We have a whole lot of tax relief tips coming your way. A financial statement that the California FTB reviews is known on Form 3561. The Form 3561 takes into account what your gross monthly income is, less any expenses that you do have for any type of living expenses. This includes for your current taxes, both IRS and state, any type of mortgage, rent payments, car maintenance, credit card bills, medical, health insurance, any daycare expenses, all of those count. And if the Franchise Tax Board has collected against you through wage garnishments or bank levies, you could actually reverse and stop those. Once a wage garnishment is in with the Franchise Tax Board, they're going to try to collect the maximum from your employer, the maximum being at 25% net after taxes, which is a pretty high amount. So if you're bringing home $4,000 a month, they're going to be garnishing $1,000 a month from you, which is pretty high. So one of the first things you do when you have your financial form, you have to prove that the $1,000 or the 25% is too much. And if you disclose enough information, it could be reduced to something that's more reasonable. And if doing so, the Franchise Tax Board will send a partial release to your employer. Now, the partial release could be an amount that is workable for you. So if it works out that it could be $25 a pay period, $50 a pay period, $100 a pay period, it has to make sense financially for the state of California to evaluate that. Now, a bank levy is very harsh. The bank levy that the Franchise Tax Board sends the bank is for the entire balance you owe them. For example, if you owe the Franchise Tax Board $20,000, the levy that they send to the bank is going to be for $20,000. If you have less than that, then the bank will forward the entire balance because it's less than the $20,000. Now, on the reverse side, let's say you owe the Franchise Tax Board $5,000, but you have $20,000 in your bank account. Since you only owe the Franchise Tax Board $5,000, that is the only amount that the bank will hold and send to the Franchise Tax Board. But you could put a hold to that. You have to act quick because the moment the bank levy hits your bank account, you have 9 calendar days to put a stop and a reversal for the Franchise Tax Board to release the funds back into your bank account. And in order to do that, you have to prove financial hardship. Do you have other bills to pay instead of the taxes? So once again, Form 3561 comes in to save the day. Here's where you disclose to the Franchise Tax Board all of your income sources, all of your living expenses, and therefore you could prove financial hardship that you have bills to pay, and the Franchise Tax Board shouldn't take 100% of your money. The California Franchise Tax Board does have an offer and compromise program, but it is extremely difficult to qualify for. Nevertheless, it never hurts to review the requirements if you do qualify for the Franchise Tax Board offer and compromise program. The way it would work is you offer the state of California a certain amount no matter what you do owe. But once again, it is extremely difficult for the Franchise Tax Board to be accepting an offer and compromise program. The second type of arrangement is about the 3 different payment plans that the state of California has to offer. The first one, generally if you're under about $10,000, the Franchise Tax Board would take a 36-month or 3-year installment agreement. Another type of installment agreement is a 60-month or a 5-year repayment program to the state of California. Now, generally, you also have to fill out a financial statement known as a 3561, submitted along with the request of the installment agreement. And lastly, and then the third payment option with the state of California is if neither the 36 or the 60-month payment program makes sense, then you would request a partial pay installment agreement where it's based upon your current finances. And of course, the 3561 financial form would have to be filled out, completed, and submitted along with your installment agreement request. So under this program with the partial pay installment plan, generally the state of California would want to request and review financials maybe in about a year or 2 years later to see if it would make sense to continue this payment program or if it has to be a little higher in the future. Now, one of the major issues with the state of California, especially if you have not filed a tax return, is what they deem a notice of proposed assessment based upon your non-tax filings. And what this is, it's known as an NPA, Notice of Proposed Assessment. The state of California makes certain assumptions, and the part that's not fair is the fact that they might have ghost income reported to you, meaning that they make several assumptions based upon your history, such as if you've been in mortgage sales and you have a license for mortgage and you haven't filed in the last 3 years, they may assume that you made a whole lot higher income based upon your more experience and your vocational licensing, that they just consider your income to be higher, even if it's not accurate. But the part that they do it on is California law, where they are able to make these assumptions, add the taxes, interest, penalties, and send you to collections. And if you have not done this for several years, they're going to go ahead and do this for you. The part that's troubling and the part that you have to reconsider is what happens if you left that occupation? What happens if you're no longer have that vocational license, or you completely left that industry? Then you would have to submit your reconsideration to the state of California with proof. And this generally does help out if you have a reconsideration, because if the franchise tax board is assuming, for as an example, that you're now earning $100,000 for the last 3 years, even if you have not filed, but that's not true. Let's say if you suffered some kind of medical injury, you left the vocation, or you just stopped working, became a stay-at-home parent, you have to submit this reconsideration for the state of California to consider. And if your reconsideration completely eliminates your tax debt with the state of California, then it's an excellent program to submit your reconsideration. Nevertheless, the state of California sometimes does not offer many different solutions, but the point is you at least want to take the preemptive approaches to submit your resolution instead of the state of California just sending out garnishments and levies and doing whatever they want with your account. And if you need help, we're more than happy to provide a free case review and to see if we could go ahead and settle out your state of California FTB tax problems.